T is here and welcome back. Now, I hope by now you have completed or at least started your 2021 goals and you are ready to put your goals into action. Now, you guys, I know numbers are not the most exciting thing. It's not as exciting as writing goals or envisioning where you want your business to be by the end of the year. I get it. But I want to challenge you. I want to make sure you have your budget in place because a budget is so important because it starts unpacking the keys to get you to your set goals. Not only that, knowledge is power, and COVID 19 has made it so important and so critical to have a pulse on your finances and a handle on what your financial data is telling you, especially in a year of uncertainty. So if you haven't seen the goals and budgeting video yet, and if you have not started yet, go back to that prior video, start watching it, and make sure that you get your budget in place. Don't wait or don't procrastinate any longer. Okay. So I saw so many businesses last year during this lockdown that had were discovering that they were having decline in sales and revenue and actually had to close their business. And what I found that a lot of small businesses that went out of businesses did not have a handle on their cash. And it still alarms me today that how many businesses still run blind, basically from either a bank statement or their bank balance. And it's only when they're hit with overdraft fees or they've hit with an overdraft limit that they realize that there is a problem going on. But effective cash forecasting, you will find it will help you as an owner, especially during this pandemic. And when you use a financial tool that will help you forecast your cash, it can help you to make a number of decisions for your business. It can help you pivot to new sales channels, especially if you're finding your products or services you're currently offering is not working during this time period. If you're planning to reopen your business, you can use the data to determine where you stand right now and project on how you stand in the future months. As well as if you're having issues with cash, you can now forecast if you need to reduce expenses, such as you might find out that you really need to start laying off some employees. So this week, Ray is going to show you how to use a cash management and forecast planner. This is a new tool that we recently created for you. Um, if you have not downloaded it yet, please do. It's new. It wasn't in the original videos, so you will have to go back and download it. But Ray this week is planning to walk you through how to use that new cash management and forecast planner effectively. Okay. I personally use this worksheet in my business, and each month I'm constantly updating it, evaluating the numbers. I'm running scenarios. If I hire a person, what does my cash look like in the next 3 months? I'm using this tool to determine or identify if I'm burning through cash too quick. I'm using it if I want to purchase things such as equipment, computers. I can determine how this will affect my cash. I also use it to help prepare my budgets each year. So you can use it a number of ways. But the key takeaway here this week is you cannot use this financial tool only one time. This means you need to consistently be reviewing it. You need to be consistently be monitoring it, updating it, Otherwise, the cash flow planner here is just garbage. This is not a one-time thing. You're going to have to continually have to work on it and update it. So, without further ado, I want to get started. Are you ready to get started? I'm ready to get started. Let's get started, Ray.
This week's micro course will focus on the cash planner. Now, we talked about identifying the things in your financials as well as in the vision that you'd like to work on in this coming year. The set of financials that we began with, income statement, cash flow, and balance sheet, are good tools to do that, to look at what you did last year and see how everything fits together when it comes to, the revenue, the net income, how that flows through as cash and sources and uses of cash, and then the balance sheet, which shows the assets and liabilities, and then what basically the net worth of the business is. But on an ongoing basis, it's better to use something that can show you a month-to-month projection of what your cash is going to look like in your business. And we do that by creating a financial statement for a small business that will combine the net income or the income statement with the cash flow. And this document will do that for you. So the way we accomplish a monthly cash planner for a small business, which is typically cash-based, not a whole lot of on-balance sheet type of assets. Most of the things are going to fall into the income statement. But the income statement doesn't tell the complete cash story. So what we do is we adapt the income statement to include cash flow. And it's a pretty simple process. So I'm going to go ahead and introduce you to the tool that we're going to use from here on out to organize your cash from month to month and project out what the cash is going to look like when you make some of those key input changes we discussed, which will be in the next week's video. So here's a look at our cash planner. And I'm just going to highlight a few of the areas and show you again how this is used so that you can use it as a meaningful tool going forward. So the cash planner is at a glance each month of the year. So we start with January, end in December, and there's two different tabs that we have here that you can use. One is called a calculated and the other is manual. And the difference between, first I'll hit the calculated income statement, cash flow combination so that you can see how this works. So the way it works is you have your typical income statement items, but you also have your cash starting point and your cash ending point, and then a few things that come in that normally wouldn't show up in your income statement. So this should match your bank account to a degree as to what's actually coming in and going out. And if you look at the top here, we have the cash, beginning cash, and then we have all of your income statement items that we had in the previous lessons. And then the thing on the bottom after net income, we add back and take out a couple things that wouldn't normally show up on the income statement. First one is the principal paid on your loans. Well, that's not an income statement item. Owner's draw, not an income statement item, as well as capital in. You can use that either way. Owner's draw could either be positive, cash in, or negative, pulling cash out. And then other cash in and out. That wouldn't normally show up on the income statement. And then we have a monthly cash flow and an ending cash flow. And the way this calculated formula works is the only time that you're going to input is on that first month, and then it's going to project out each month based on what you put in the first month. So then if you notice, the ending cash from January jumps into the beginning cash of February, and so on. Ending cash of February, beginning cash of March. So it automatically calculates for you so that if you put in a scenario in January that you expect to have monthly, reoccur monthly, then it'll show you how fast it's going to take to burn through your cash, or even better if you're accumulating cash. So that's just an overview of the calculated sheet versus the manual. Now we'll jump into the manual sheet, and the only difference here is in the manual entry is you're going to enter all of the values throughout every single month. And this would be useful if you expect things to vary significantly each month. If you expect things to vary significantly each month, you can also apply that to the calculated worksheet, and I'll show you that as well in a quick illustration. But in the manual, under the manual tab, you can enter each month different than the first month, different than the previous month, so that you can have a lot of variance. The other way to use this would be to use the manual tab as the actual. So you have your projected and the calculated, and then the actual in the manual tab. Then you can take a look at some of the variances and analyze, what happened here. We expected, 6,000 from Service 1 in April, but we actually got 4,000. You can see what happened and what changed, and maybe reproject. So I'm going to jump back to the calculated. If you do have some changes that you want to make in the calculated worksheet, well, then you can do that by simply clicking on one of the items. Let's take March's salaries and wages. Let's say we expect that to change from 4,000 to 6,000. You can change simply that one month, and then every month after that you can simply copy or go through and change that from that month on, and it won't affect anything else. If you expect that in April you're going to have a lot less revenue than you were in March or the months after that, for whatever reason April's a bad month and you know that, you can go ahead and type in a different revenue for April, and it'll only affect April and then the ongoing cash calculation. But you can see how that'll help you project into the future. Now just take a quick look as to how to fill this in. It's basically the same thing as it was in the previous lessons. You're going to use the highlighted blue cells to enter inputs. Any other cells are going to be calculated one way or another, but you're welcome to override anything that you'd like. But if you take a look at the under the cash planner, under the column that has the names of the different items, income statement items or cash items, basically you can change those to whatever you'd like to. You can also add a row if you'd like to. So if you have more operating expenses that you'd like to break out, you're welcome to add more rows to that. And here's how you do that. You simply highlight, and then you insert, and then you name it, and you can insert all the way across the board in one click. And then you will have to go fill in the name of whatever that happens to be in each month. And then the other thing I'd like to point out is I do have a tax rate of 35%. If you know that to be different, you can change that. If you want to put 0, you can do that as well, because technically your tax expense isn't going to be a monthly expense. I put it in there because it's going to be an expense at some point. And if you plan for it each month, you can do something with it. Throw it into a different account, just like you would in personal finances. Smooth out an annual expense by planning for it on a monthly basis, where you actually get your income that comes in. So you're matching an expense to your income flow or your cash flow versus having to pay it all at one time. But you're welcome to make that 0, because that's not an actual expense that you're going to have each month. And you're welcome to make it a different figure as well if you happen to know your tax rate's lower or higher for whatever reason. So that's this week's introduction to the financial statement that we'll be using going forward. It's much simpler than the 3 main financial statements, which have a lot of value in understanding how things work together in terms of income, cash, assets, liabilities. And we'll refer back to that maybe a little bit later, but for now, as you project out what your key inputs are going to be in the coming weeks, and you input them and try to see how that extrapolates out over the next 12 months, this is going to be a much more useful tool. And we want to make a useful tool for you so that you can make some results that are going to be based on actual, inputs that have been well thought through and that have been tried and tested, and you can play around a little bit to see what some changes will do to the coming months. I'll play around with a couple numbers really quick just to show some cause and effect. Let's say I change my advertising and I change it to from 1,000 to 2,000 a month. Well, how fast do I run out of cash under that scenario? And you can see here I run out of cash in this month, and this is the deficit that I would need to make up. So what that's telling me is if I'm going to spend another $1,000 on advertising, I better match that revenue with it somewhere along the line between the time that I increase the expense to the time that I run out of cash, or I'm going to have a problem. Let's say we have a couple of bad months and you expect to have a few bad months because you're maybe seasonal. Well, let's input that in those few months and see what that does to your cash flow and how are you going to make that up. And you can do this with just about any line item that you feel like you're going to be manipulating with those key inputs. And we'll talk more about that and do more of the inputs next week. But this gives you an introduction to a cash flow planner that you can use to project out for 12 months and make some meaningful decisions based on this. So this will be a helpful tool. I look forward to guiding you through the next step of entering your key inputs that will support your goals and your aspirations for the coming year and making them real, because that's what's going to make it so that they actually happen.